Hey everybody, good afternoon wherever you are. Welcome back to Markets for Millennials. We're just going to take a look at Bitcoin today. Bitcoin doing some crazy Bitcoin things, so let's just take a moment and step back so we can have some situational awareness. So we have April 14th, that was our swing high, wick high peak, and we have ever since we had ever since May 10th, May 9th, May 10th in that area, we've put this trend line, we've called it the most important trend line in crypto, and Bitcoin has not broken it ever since. We had huge sell downs due to Elon Musk tweeting and China FUD. We've had this long consolidation period under 40,000, a couple of times trying to break out. You had people, who were, when we were, right over here, when we failed to, we made a higher swing high here, and then got rejected and came down once again to about 30,000 on Wix and stuff. We had people saying, oh, Bitcoin's going to go to 20,000. We had people very bearish, people without situational awareness. And this has been a long time coming. But then we have the last, ever since the 20th, 19th and 20th of July. I talked about this in my previous videos. I tweeted right around this day here, I tweeted that we were about to see the very bottom in terms of daily closes, and that after this, before the end of July, we would see a 30% rise, and then boom, look at how it happened, right? And I had talked in my previous video about how I got that based on looking at previous cycles, looking at price action once we got to the actual low of the mid-cycle dip. But I just, for some perspective here, I thought it would be great to just think about this for a second. If you look, I posted about this earlier. Shout out to Giles, by the way, for this tweet about the bull of all bulls preparing its second assault on the most important trend line in crypto. And at the time, we were less than $1,000 away, and we are just continuing to edge our way closer and closer to that. But what I really wanted to show you here was to show you this. For perspective, if we happen to, we have a little over 2 hours before the close, the daily close on the Bitcoin chart, and this says that if we happen to break this line today, and I'm not saying we will. In fact, I don't think we will today. But if we did, then that means that it will have been 87 days since we established this trend line. And I continue to say that's fortitude. That's patience, and nobody did it better than all of us at CTM. And so if you look, right, so we had the high, and then May 10th, we put this trend line in, and it has been 87 days. Now, if you think about it, if you go back to the high, right, to our little swing high up here, right, it's been even longer, right? Oops. You got to add almost another month. Right, so what is that? Another 24 days, so over 100 days since the high, right? We've been waiting for this, right? And 87 days since we established this trend line, right? And so we came up to it, and obviously we bounced off. And it's interesting because as soon as a lot of people, were so excited watching these 10 green candles in a row, everyone's like, it's going to 1 million next week. Obviously not 1 million, but people had got really high hopes. A lot of people started being irresponsible, taking long leverage positions. In fact, I was noticing that a lot of people, we were already up here before a lot of people started taking, I started noticing that people were taking these leveraged long positions. Just not very responsible, right? Because, even for Bitcoin, this price action is not sustainable. At least, it's not going to just go up like that endlessly and have no red candles. So I don't know what people were expecting. In fact, I personally, I talked about in my previous Bitcoin video that we could, if we are looking at what happened in other cycles, once we, make this move, we could retrace, up to 50%, which actually would have technically been somewhere in this area, right? We could retrace 50% of the move, because this type of price action doesn't happen. If you think about it, right, if you just simply take this move, right, If we take this move, this retrace was a 30% retrace of the move, right? And that happens because we had such unsustainable price action going to the upside. When I say unsustainable, I'm not saying that that means, oh, Bitcoin is going to crash. That's not what I'm saying. What I'm saying is you have to have these massive moves checked by a retrace. And that's what has been happening. Now, it's not to say that it's easy. Just because you're expecting it doesn't mean that it's easy, to watch price come up this high and then retrace 30% of its gain. It's not easy, right? But people, as excited as they were as price was going to the upside, as soon as we had a couple of red candles in a row, people were like, oh, this was a failed breakout. We're going to go back down and we're going to retest 30,000 and we're going to go back down even below. So people get so emotional because they don't actually know what they're doing, right? So what did I do? For situational awareness, I want to just share with you kind of my approach. In my video, I said that we could see up to 50% of a retrace. Now, it doesn't have to be exact. So what I did over the last week was I looked at this consolidation period that we just went through, and I was looking for a level, right? And I saw a lot of wicks here. I saw wicks here. I saw wicks here. I saw wicks here, right? So I know that's not exact, but because of that, I kind of eyeballed a spot right here where I put this white line. And if I wanted to establish, I don't have it darkened, I don't have it showing up right now, but I had another level which was approximately right here. So I was this white line is not exactly 50%, it's more like 40% down. And this one is over 50% down. These were the levels that I was looking at, right? So then if we go to an 8-hour chart, what you see here is another thing that helped me to pick this level was that when we had kind of our first significant retrace down after some of this gain, I saw that we had some support here, which kind of lined up around the same area. So I basically stuck that white line right there, and I was looking for price to hold that. Now, what price ended up engaging a lot with, right, was if you see how I have the most important trend line in crypto, well, if you clone it, because markets have a lot of symmetry, if you clone it and you place it there, right, if you look back, price engages with it at a couple of points on the way up and then on the way down, right? You actually see that price was respecting that level, right? Wicking into it a couple of times before establishing some support here at, what is this, about 36,500, and then bouncing above it and then coming in, retesting it on the 8-hour chart a couple of times, coming up. And then when we came back down over the last 4 days prior to this move up, you actually saw it respected, right? And so it turns out that even though I was expecting the support here at the horizontal level, it turned out that our support was more coming from this cloned trend line. Okay, so that's something that you should note. Okay, but once again, like we said, price is finding its support and it's now resuming back up. Okay, so that's what price has been doing, right? Now, what could happen over the next couple of weeks? So let's talk about some goals. Our initial goals over the next, we'll say month or two, we'll say 1 to 2 months from now, maybe by the end of August or potentially middle to end of September, we want to have reattained this all-time high, right? And it's entirely possible. Now, as far as levels go, I've got a couple of different lines for different reasons, but the ones that I have darkened on the screen that you can really see here are the ones that I think are going to be the most notable, right? So I have a level horizontal at 51,000-ish, a little over 51,000, and then near our all-time high at 63,800. And what I've seen in a lot of people's charts is if you just look at our the distribution here that we had, between February and May, a lot of people are taking basically all of these swing highs and swing lows and making levels out of them, and their chart is so messy. I know this isn't going to be exact, but it's like you just look at their chart and their lines are just like, they have so many lines packed in there. And while any single one of them could potentially offer resistance. These are the lines that I think are the most important. And so I've got those. So I'm targeting these. So what are we going to be looking for as we attempt, once we break out, or, actually let's talk about the breakout first. What are we looking for to happen? What I'm looking is over the next few days, I'm looking for price either to consolidate below and then break out, or on the flip side, to break out over the next 24 hours and then retest. That's what I'm going to be looking for. Now, it's really important that we get this right. And so you have to be really careful. As I said, a lot of people were right around this level taking, in this level right here, we're taking leverage longs, and you have to be really careful. You have to be responsible. You have to know your levels. Because just like, we had this 10-day in a row green candles move up, that could also happen on the break. It's entirely possible that we break through here and come all the way up to, we could come up $10,000. And if it does that, it's entirely possible that we could also come all the way back down to retrace and retest this level that we broke right here. Or we could even come down and test the most important trend line in crypto. You just have to be prepared for that. So if you're hodling, if you're just hodling, then what you should do is you should close your phone, close your computer, and go on vacation and come back in a month, right? Just don't look for a month, because you don't have to worry. But if you're trading, you have to be extra careful and you have to be mindful of the risk, right? Be mindful of your position, be mindful of liquidation levels if you're taking out leverage, because what you don't want is to chase the momentum to the upside and then buy when it's up here, thinking that you're safe, and then watch it retrace all the way back down, right? Now, I'm not saying you can't take, a leverage position if it's up here, but I hope you realize like your liquidation levels need to be like way down here under this most important trend line in crypto. Otherwise, that's just not wise, okay? So, not financial advice, but you just got to know those levels. So in terms of timeline, what can we potentially expect? Well, from my research, if you look at, by the way, look at what trend line held. We held the 1618 golden ratio. Shout out to Year of the Bull MS Config on Twitter. I'll talk about that again in just a moment. But if you look at kind of timelining, like what could we expect for when price is going to retake the all-time high? Nothing is certain, so I just want to caveat what I'm about to say by, again, reminding you that absolutely none of what I'm about to say is certain, right? And it's just a prediction, but you have to take every prediction with a grain of salt. What I've learned from just looking at past cycle behavior is that I see that whatever happens, if you go from the wicks, that usually from the high to the low, from like your swing high to your dip, is a certain amount of time, and then from the dip to retaking is slightly longer. So let's take this one step at a time. So if we look at from our April 14th, what is that, April 14th? Yeah. April 14th high to the lowest wick, which for me on this chart on Bitstamp is June 23rd, it's 69 days. So if we guesstimate that our move up, even if we stop at 69 days, let's stop at 69 days for just a second before we retake this level. Right here, a little bit longer. Sorry, I'm doing this in real time. Okay, if we get right there, then that puts us at about August 30th. Right, so it's entirely possible that by the end of this month, we could achieve the all-time high. But I also have found that it takes usually on average a certain percentage longer for that to play out, for it to regain what it lost. That was especially true earlier in this cycle. It was also often true in the 2017 bull run. So what I'm going to do is I'm going to add a couple of weeks, right? So let's just imagine that it takes us a couple extra weeks to break the all-time high. That puts us at about mid-September. I think that's perfectly reasonable to expect that by mid-September we have retaken our all-time high. Could it be longer? Sure. Right? So that would be my timetable. That's about what I would expect. And so that means that in order for us to achieve that from where we're at today, we have to make up about 58%. We have to increase price by about 58% in the next 40 days or so. So possible, right? Now, people are wondering when is the peak going to be? You have people that are saying that, oh, if this is just the mid-cycle dip, then we're not going to have a high until into 2022. But I just want to show you, right, going back and looking at, let me go to my daily. A lot of people, because we've been making comparisons to the 2017 cycle, right? So if you go from it was a double wave, so you had an initial blow off top and then a long consolidation and then another blow off top at the cycle peak. If you follow that model, right? So you have this support level or this resistance level that I put here. If you go from the first time that it closed above, which was November 6, 2013, and then you go, whether you use November 29th or whether you use December 4th, because again, if you're talking closing prices, then these two are the highest closing prices of the cycle, right? It's less than a month. 23 days if you use the earlier date, 28 days if you use the later date, right? So what does that mean? Well, that means that if we are tracking the 2013 cycle in terms of price action, consolidation, and so on, right? And if it takes us until mid-September to retake our all-time high, well, if you go, that's not exact, sorry, let me fix that. If you go from about that time, you go 1 month's worth of time, that's mid-October, that's October 15th, or approximately October 16th. And that's important to me to watch for, because October 16th was one of the places, right? I had another one that was like either, I think around late June or early July. October 16th was a place, according to my original Bitcoin analysis, that I thought we could see a peak, right? Within 30 days of this zone. So it's entirely possible, right? So I just want you guys, again, to see that. It's a month, basically a month between when I suspect we probably will have retaken our all-time high to when we see the peak. So so for all the people out there who are saying that it's not possible for us to see an all-time high before, say, even December or before 2022 begins, look at previous cycles. You'll see it is entirely possible. Okay, so just wanted to point that out. Now, what targets are we looking at above that? And for this, what I'm going to do is I'm going to go to my other Bitcoin chart that I've used before. And what I have activated right now are my fib levels. I talked about these in my last Bitcoin video, right? The emphasis here was that I wanted to point out, as MSConfig Year of the Bull pointed out, that Bitcoin never loses its 1618 level, right? And so for these, I just want to mention, I'm using the closing prices, the highest daily close for the peak, and then the lowest daily close for the bear market bottom. So if you go from the pre-halving peak, right, kind of pre-halving cycle peak, right, then what you find is that the level, the 1618 level holds, right? Not only from the first peak, from the double wave, and then the first kind of low and sell down after the blow off top, but it's even true prior to that. But I want to show you here, right, the actual peak was approximately the 44,618 level. Now what I did was, I've got a lot of different lines on the screen here. I was just trying to look at various fib levels and where they would fall, where it seems important, right? So what's notable is the 44,618 level was right around the closing peak of the 2013 bull market cycle, or bull market phase. Then what you notice is that the low, the bear market low, comes in around the 6382 level. So that's kind of interesting to point out. I just thought that that would be interesting. And then the 8382 level, you see consolidation along that level. So that's a level that I thought was important to consider. Okay, and then let's go to the next one. Right, that's pre-halving, so that might not mean anything. But then if you do the same thing from after the first halving from the 2013 peak to the bear market low, then what you get is you can again see that, and I use different levels here. You can see this 1618 level held as support during the mid-cycle dip, the shakeout, and then you see certain levels that were, look at the 2618 was resistance right before the mid-cycle dip, and then was support after another major dip, right? And then you actually see that the 18382 level is the one that's actually the peak, right? And then if you come along to the bear market low, the 2618 level is what actually, the bear market low gets in right above that, okay? So, and again, you can kind of see different levels that played a role throughout. Now, with that in mind, let's look at the current. I did the same thing, but this time for this specific fib chart, what I did was I combined the levels that were important for the 2013 and the 2017 peak to the bear market. And what I found was if you combine those levels, you actually find that they were pretty important, right? 1618 held, right, as support. The 2618 level, at least for a time, held as support. And it's entirely possible that it could be some resistance back on the way up, right? But then I want you to see here, look what happens as you start to squeeze this down, right? If you again think back to what the peaks were, and then you squeeze this down, it just gets crazy, right? So here, look, the 382 level, if we were going to peak similarly in terms of Fibonacci levels to the 2017 bull run, then we could peak somewhere around here, which is at approximately 300,000. That seems like a lot, right? But then it gets even crazier if you look at it in terms of the 2013 cycle. The 2013 cycle was 44,618, that level. So what that means is that if we got close to that, then that's over 700,000, which is just mind-boggling. Okay. Now, if we are averaging between the two cycles, then what that means is a price target in terms of Fibonacci levels, if we're averaging, could be somewhere in the middle. So between 300,000 and 700,000. Now, I don't think that that's going to happen. My personal take is that a lot of people, when they look at diminishing returns, they're looking at it in terms of price. It's price specific, and they're looking at it from what was the halving to the peak, and then if you take certain percentage, if you adjust for percentages and things like that. I actually do think we're going to see diminishing returns, but my caveat is that the diminishing returns are actually based on Fibonacci levels. And because the Fibonacci levels are from the peak to the bear market low, it changes what that means in terms of price. Okay, so what I'm saying is my prediction is that I think we're going to be somewhere in this range, right? And I actually am supposed to have a level here. I don't know where it went, but I actually think we're going to be somewhere in this range. So I think we're going to be between 220,000 and 300,000. From a Fibonacci standpoint, I think we're going to be below and have diminishing returns from that perspective. Not necessarily from the dollar amount perspective or pure dollar and percentage basis, but from a Fibonacci basis. But I've also, and there's different ways, just so you understand, there are different ways to calculate that. So there are different ways that I calculated it where we actually ended up in this range between the 8382 and the 6382, which is actually between 100,000 and 140,000, which would be definitely diminishing returns in every aspect that you could think of. I don't think we're going to be here. I think we're going to be, like I said, above that. That's just my personal view. And the importance of this is that as you start thinking about Bitcoin retaking its all-time high and moving into price discovery towards the bull market peak, it's important to start thinking about what levels you're going to be looking at. And I'm going to be interested when all is said and done, after the bull market has truly peaked, I'm going to be interested in going back and seeing which of these levels were actually relevant, which ones were resistance, which ones were support, and where the peak ends up being. But suffice to say that the upside potential is enormous on Bitcoin, right? And so to just take a moment then and talk about GBTC, because I get asked questions about that all the time, right? Remember that GBTC is 100% dependent on what the price of Bitcoin does. And you'll notice like my trend lines are a little bit different, right? So where we ended up bottoming out for GBTC was the resistance which we had at the end of November and into early December. That was our floor, right? So no matter what, Bitcoin price was falling and GBTC ends up bottoming here, right? So you have, various trend lines if we want to just fiddle around here. If you want to have like a similar most important trend line in crypto, we have a lot longer to go if we do it that way. We've already broken out of it if you're using the actual touches, the wicks from where Bitcoin's wicks are. We've already broken out of that. But again, GBTC, while tracking Bitcoin's price in terms of the whole cycle, day by day, week by week, it's not always the same. So you kind of see a resistance level that has been established here. GBTC is going to follow Bitcoin. It's pretty amazing how many people have failed to buy GBTC when it was in this range. And I guarantee you tons of people are going to buy either here or here. And by then, look at all the gains they would have missed out on. And a lot of people are looking at it purely based on what the premium or the discount is. There are so many people who are not going to buy until it's at premium. But for all we know, and I think that when Bitcoin, unless it's turned into an ETF before the peak, I think that when, I think that when GBTC peaks, it will be at a premium. But where is it going to be at a premium? Like if we look, some of my original price targets on GBTC are, between, the range that I'm looking at now is between 200 and 280, right? So the question is, if GBTC is at discount now, but eventually ends at premium, where in this range is it going to end up going from negative to positive? Where is it going to go from discount to premium? Like, how are you going to know? What if it's up here at $160 before it goes to premium? Look at all of that upside that you missed out on. That's why you have to think rightly about, about what these funds are. The time when it's at discount is the perfect time to buy because you're getting it when it's undervalued. And if you believe in Bitcoin overall, then you have to also believe in GBTC, or potentially, I'm rooting for all of the other Bitcoin tracking funds to succeed as well. So, whatever those may be, they're all going to track Bitcoin. So if you're a fan of Bitcoin, then, you ought to also believe in the fund that tracks it. And so the upside potential is enormous, and that's what I wanted to talk about today. Be responsible, pick your levels, and sit back and watch as the bull of all bulls runs. Thanks for watching. I'll see you guys next time.